Power Lunch South Africa. Now, first it was the Argentine peso, then the Turkish lira, third the Russian ruble, and then the Indian rupee. Could the South African rand be next for an exchange rate crisis? To find out, I'm joined by Jameel Ahmad, who is the Global Head of Currency Strategy and Market Research at FXTM. I mean, Jameel, talking about rand or currency volatility or potential crisis, I mean, judging by the rand's performance today following the release of our consumer inflation figures, it looks like the rand is pretty okay.
What's really impacted the emerging market sentiment as a whole in recent weeks, and actually throughout the past quarter and 6 months, has been the wide range of different external uncertainties. And this is exactly where emerging markets see how vulnerable they can be to weakness when it comes to external uncertainties, and specifically what has been the prolonged trade tensions between the United States and China. However, this morning, there is some optimism building that we could be heading towards a turning point. The markets reacted more positively and muted to confirmation of the Trump tariffs on 200 billion of Chinese imports. Of course, this is something the markets had been priced in for about 2 weeks ago. However, Premier Xi Jinping made more reassuring comments that authorities are not looking to devalue the Chinese yuan. And this has helped raise investor confidence around this issue, and emerging market sentiment is benefiting as a whole. So we've seen a stronger South African rand. Most Asian emerging market currencies are also trading higher, and the same with our other emerging market currencies in the EMA, such as the Turkish lira and the Russian ruble.
I mean, Jameel, because the timing of the turning point for emerging market currencies has been debated. I mean, just towards the end of last week when we saw Turkey and then Russia raise its interest rates, many had said that that was the inflection point. So now what makes or what brings this extra confidence that perhaps right now the sell-off in the EM space has reached the bottom for now?
What was so problematic for the emerging markets in recent weeks and months is that there was an overwhelming number of different factors that were contributing to pull EM currencies for weakness. Trade tensions, question of central bank independence with both Turkey and Russia. There's also been currency crises in the lira, which has caused a contagion of impact. So there's a different couple of factors that were at play here. But the markets are looking a little bit more optimistic now. I wouldn't say that all the smoke and the clouds are clear completely yet, because there's still a lot of unpredictable political risk. And nobody really can say what's going to happen next with the trade tensions, because we are talking about politics from a very unconventional president of the United States who doesn't exactly play by the textbook. Things are pretty unorthodox when it comes to the financial markets today compared to 18 months ago, specifically with political risk. However, for South Africa, one benefit from today is that the inflation data showed some easing in inflationary pressures over the past month, which should limit the pressure on the South African Reserve Bank to follow the path of Russia and Turkey from last week when it comes to raising domestic interest rates. And also, this is a good time because with the economy just entering a recession, there's actually an argument that in South Africa, interest rates should perhaps be lower to help domestic growth. And if the South African Reserve Bank were actually to raise interest rates, it just shows how concerned authorities are about currency volatility and the market weakness in the rand over recent months.
But then, you know, of course, some would also argue that an increase in interest rates would also increase the appeal of investing in South Africa's bond market from an interest rate differential perspective, and this could actually be supportive of the rand, and especially in light of what we are seeing in terms of what other central bankers in the EM space are doing, as you did mention Turkey and also Russia. So to what degree could a South African Reserve Bank who tomorrow comes out and keeps interest rates unchanged be rand negative?
I agree with your point, actually. It depends whether the SARB wants to monitor price stability right now when it comes to the South African rand, or whether they want to look at the macroeconomic picture. Because to be honest with you, because the South African rand is so vulnerable to a whole different list of external factors, and it's not just the rand, also with the ruble, the lira and the Brazilian real, they're just a few of the currencies, that the fortunes for the currency can actually change at any given moment by something that's very idiosyncratic and away from South Africa. So what I would look for when it comes to authorities is potentially to leave interest rates unchanged tomorrow, because these trade tensions and all these external uncertainties, they could go away in a month. What the markets also aren't considering is that there is a US midterm election in less than 2 months, which could cause another round of market volatility. And we can't keep looking for EM central banks to be raising interest rates. Again, with the economy recently entering into a recession, I would look away from price stability, and I would also look away from currency weakness. And if anything, if there's going to be a change in interest rate policy, I would consider reducing rates to help the domestic economy, because the external uncertainties in 2018 are so high, we cannot predict what's next when it comes to China, US, and global trade tensions. So South Africa has to do what it can to protect itself from a very volatile external environment.
Jameel, I'm sure your clients ask you this all the time, and especially in light of the recent volatility in the past couple of weeks in the EM space. Do we still offer value? Do emerging markets still offer value for global investors?
Yes, they do. When the markets are more calm and when there's more optimism around a period of less market uncertainty, such as this morning with these more optimistic comments from the Chinese premier. The problem is that the greenback and the US dollar have got so strong because of the trade tensions that emerging markets have really been punished by both external uncertainties, a number of different ones there to consider as examples, and resurgent prolonged dollar strength. If these trade tensions reduce, the dollar will also get weaker, because this is something that's actually considered investors to buy the dollar as a safe haven. And this will also increase risk appetite, which means that all of the emerging market currencies that have been really punished in recent weeks and months, and there's a global basket of different examples here, including markets, Indonesian rupiah and the Indian rupee. This would make investors reconsider EMs because they still offer very high yield. Away from the United States and Federal Reserve US interest rate policy, none of the developed major central banks are anywhere near ready to normalize monetary policy, which means EMs are attractive.
Right, Jameel, we will leave it there. Thanks so much for your time. As always, that was Jameel Ahmad, who is the Global Head of Currency Strategy and Market Research at FXTM. Right.